Welcome to Truth Behind History, where we uncover the hidden forces that shape civilizations. Today, we're diving into a topic that shapes the world more than you might realize: big banking. Yes, I know, banking might sound like the least exciting thing ever, but trust me, this is where the real power moves happen. Wars were funded, nations were built, and entire economies were shaped by the rise of financial empires. So grab your metaphorical monocle and top hat, because we're stepping into the world of 19th century banking, where money wasn't just a tool, it was a weapon. Let's get into it. All right, first things first. How did we get here? The 19th century was a boom period for banks. And when I say big banking, I don't mean your friendly neighborhood credit union. I'm talking about financial giants that held entire governments in their pockets. Banks controlled government bonds, and these weren't just slips of paper. They were the fuel behind wars, railroads, and industrial empires. Need an army? Banks have you covered. Want to build an empire of steel and steam? Better get that financing in order. The Industrial Revolution was like pouring gasoline on this fire. Factories, railways, and steamships needed massive amounts of capital, and banks were right there to provide it, at a price, of course. International trade skyrocketed, and with it, the influence of bankers. They weren't just sitting in smoky back rooms counting coins. They were shaping economic policy, brokering diplomatic deals, and deciding which industries lived and died. Bankers in this era weren't just financiers. They were power brokers. They decided who got funding and who got left behind. And as we'll see, their decisions shaped history in ways most people never even realize. Now, why did banking explode in the 19th century? Three big reasons: industrialization, global trade expansion, and of course, good old-fashioned government borrowing. First, industrialization was a game changer. Factories popped up everywhere, and they needed capital to build, expand, and modernize. You can't just wake up one day and decide to build a textile mill. You need machines, land, and workers. And that takes money. Enter the banks. Second, global trade was expanding like never before. Ships crisscrossed the oceans, carrying goods between Europe, the Americas, and Asia. But trading isn't just about goods, it's about finance. International commerce required complex financial systems, letters of credit, currency exchanges, and cross-border transactions. It was no longer just about having gold in your vault. You needed an entire system to facilitate this growing web of trade. And third, government borrowing. Nations were spending like there was no tomorrow, whether it was to fund wars, build railroads, or develop new infrastructure. And who did they turn to? The banks. Governments didn't just raise taxes, they borrowed heavily. That gave banks immense power over national economies, because when governments owe you money, you own them in more ways than one. Bankers in this era weren't just financiers, they were power brokers. They decided who got funding and who got left behind. And as we'll see, their decisions shaped history in ways most people never even realize. Now, if you think modern banks are powerful, just wait until you hear about the European banking dynasties of the 19th century. These were not your average neighborhood banks. They were empires in their own right. Let's start with government bonds. European banks didn't just handle government bonds, they controlled them. Governments needed money, whether for war, infrastructure, or national expansion, and banks were the ones financing it all. But of course, loans come with interest, and interest means profit. If a government defaulted, well, let's just say bankers had ways of ensuring they got paid. Then there were the international financial networks. These weren't just local banks serving a single country. These were global institutions. Money flowed across borders like never before, connecting the economies of Europe in a web of finance. The Rothschilds, for example, set up banking houses in multiple countries, allowing them to move capital faster than governments could react. Need to fund a war in France? No problem. Just transfer funds from the London branch. And finally, there was influence. Banks weren't just financing wars. They were advising governments on how to fight them. Diplomacy wasn't just conducted with words. It was backed by financial muscle. Need an ally to stay in the fight? Give them a loan? Need to cut off an enemy's resources? Block their financing. The biggest bankers weren't just sitting in the background. They were shaping history from behind the scenes. Meanwhile, across the Atlantic, the United States was building its own financial powerhouse. And no name is bigger in this story than J.P. Morgan. If European banking families were the kings of finance, J.P. Morgan was America's emperor. One of the biggest ways banks shaped America? Railroads. The country was expanding westward, and railroads were the backbone of that expansion. But laying thousands of miles of track wasn't cheap. Major banks stepped in, consolidating railroad companies under their control. If you controlled the railroads, you controlled commerce, and if you controlled commerce, well, you basically ran the country. Then there was Wall Street. Today we think of Wall Street as the center of global finance, but back then it was still rising. Investment banks pooled money into financial trusts, concentrating power in a small number of hands. And speaking of power, when the U.S. government faced financial crises, it wasn't the federal government that stepped in to save the day. It was J.P. Morgan. Yes, one private banker bailed out the U.S. Treasury during financial panics. That's how much influence these financial titans had. Okay, so how exactly did banks keep fueling this explosive growth? Three main tools: credit, government bonds, and investor participation. First, credit for businesses. Banks started lending in new ways, allowing companies to expand their operations. Whether you were building a steel factory or a shipping fleet, you needed capital. And banks were happy to provide it, for a price, of course. Then there were government debt markets. Bonds became a go-to tool for nations to finance wars and large-scale projects. Think of bonds like an IOU. Governments would sell bonds to raise money, promising to pay back investors with interest. Banks facilitated these transactions, acting as intermediaries and profiting along the way. And let's not forget investors. This wasn't just about banks and governments. Regular people were starting to get in on the action. A growing middle class began investing in bonds and loans, fueling financial markets. It wasn't just the ultra-wealthy making moves. Ordinary people saw banking as a way to build wealth, setting the stage for the investment culture we have today. But banking wasn't just about lending money, it was also about investing money. And that's where stock exchanges came in. The New York Stock Exchange, NYSE, and the London Stock Exchange, LSE, became major financial hubs, allowing businesses to raise capital by selling shares. Before this, funding a company meant taking out a loan. But now, you could sell ownership in your company to the public, bringing in new money without going into debt. This led to a massive increase in investor participation. More individuals and institutions started investing in stocks and bonds, expanding the financial markets at an unprecedented scale. The economy wasn't just being driven by governments and corporations anymore. Everyday investors were now a key part of the equation. And with this boom came financial market innovations. New trading practices, financial instruments, and investment strategies emerged. The stock market wasn't just about buying and selling, it was becoming a machine, constantly evolving with new ways to maximize profit. Now let's talk about one of the most profitable and controversial aspects of 19th century banking: war financing. It turns out wars aren't just fought on battlefields, they're fought in banks too. Governments needed massive amounts of money to fund military campaigns, and banks were more than willing to step in. They issued loans, floated war bonds, and ensured that armies had the resources to keep fighting. In some cases, banks even funded both sides of a conflict. Why pick a winner when you can profit no matter who wins? And it wasn't just about war. Military spending fueled industrial growth. Defense contracts and military infrastructure projects pumped money into industries like steel, railroads, and shipbuilding. It's no coincidence that industrialization and military expansion went hand in hand. War was big business, and banks were the ones making it happen. Of course, all this financing had consequences. After the wars ended, governments were left with massive amounts of debt. Nations struggled with post-war financial crises, leading to major shifts in economic policy. And who held the keys to economic recovery? That's right, banks. But banks weren't just pulling strings in war. They were influencing everything. Let's start with economic policies. Governments relied on bankers for advice on monetary policy, trade regulations, and fiscal strategies. When countries needed financial stability, it was often bankers, not elected officials, who provided the solutions. Then there was their role in diplomacy. Banks played a direct role in negotiating peace treaties and international agreements. Need to end a war? Better make sure the financiers are on board. Many of history's biggest diplomatic moves were shaped by financial considerations. And of course, banks controlled industries. They didn't just fund factories and railroads, they owned stakes in them. If a bank backed a particular company, that company had a competitive advantage. If a bank decided to cut funding, entire industries could collapse. Money wasn't just power, it was control. But let's not pretend this system was all smooth sailing. With massive banking power came massive banking failures. First, there were the major banking panics. The Panic of 1873 and the Panic of 1893 led to widespread recessions, showing just how fragile this system really was. Then there were bank runs and failures. When people panicked, they rushed to withdraw their money. And since banks didn't actually keep all deposits on hand, this caused entire financial institutions to collapse. This is why modern banks have deposit insurance. Because back then, if a bank failed, you lost everything. And from these crises came lessons for modern banking. The repeated financial collapses of the 19th century led to the development of central banking systems and financial regulations. Governments realized that if they didn't stabilize the banking system, the economy itself could implode. So in a way, the failures of this era paved the way for the financial systems we have today. So what's the big takeaway? The financial empires of the 19th century didn't just shape their own time, they laid the foundation for modern banking. Many of today's biggest financial institutions trace their origins to this era. The foundation of modern banking was built on the lending, investment, and financial innovations of the 19th century. Then there were the global financial networks, the international finance systems we use today, global trade, cross-border banking, investment markets, all started during this period. The world became financially interconnected, and once that happened, there was no going back. And finally, lessons for financial stability. The banking crises of the 19th century forced nations to rethink financial regulation, leading to the creation of central banks and frameworks designed to prevent collapses. In other words, our modern financial world exists because of the successes and failures of these banking empires. And that's it, the rise of big banking and how it shaped the modern world. Who knew finance could be this dramatic? Wars funded, economies built, nations controlled, all thanks to the power of money. If you enjoyed this deep dive into history, make sure to like, comment, and subscribe. And if you love learning about the hidden forces that shape the past, check out some of my other videos on truth behind history. I'll see you in the next one.